Oh, look at that.
So just so they don't write it wrong a second time, thank you for providing raffle.
Here. I can rename you guys. Yeah.
Super.
No.
Okay, sure.
Yep. We'll give people another minute or two, and then we'll do our little accountability check-in. Okay, let's start with our accountability. I'm sure we'll have a couple late bloomers or late arrivers. Um, Alex, you want to give us an update on your contacts and how everything's going?
Yeah, I got two new leads yesterday, or one yesterday and one the day before from social media. Someone just tagged me that they were looking for a home, and then the other one was a referral from a friend.
Perfect.
And I also I've been having trouble with the handwritten letters, but
Mhm.
I've only sent out three of them
Okay,
since last week. So in a week, I've only sent out three, and I've been hitting pretty much my 10 touches every day with people.
good.
Just the social media, I've been trying to get a little better. I do about 10 likes, just I don't get my 5 comments every time or every day.
Well,
Sometimes I'll
hey,
get like three, or I'll get off completely and do what I have to do.
well, good things I'm hearing is that it's working because you have leads coming in, so that's great. You're doing something so you can build on from there, and what you are doing is working, so that's great. Just keep that's a starting point, and you can keep on building from there. Isabella, how's everything going with you?
Um, so I lost a lister, but that's okay. they decided to use an investor, but I decided to do some more networking and give my business cards out to my SOI. And so that's all I've been doing. I've been doing that and just trying to have a stronger relationship with them.
Good, excellent, great job. And we all lose some sometimes, so that's okay. VJ,
Hi,
how's everything going?
going good. This is my, I would say, first week of my entry into this field. Like, just got my license.
Yeah,
At this point, like, going over the training materials and just uh, just whatever there in the instruction, it to go practically implement. I have few
excellent,
ideas. I will launch myself in 1 or 2 weeks.
good, excellent. Start doing that reach out while you watch too. Don't be afraid.
Sure.
Heather, how's business looking for you?
I have been doing a lot of open houses. Well, I did open houses this weekend and then I took 2 weeks off because I went out of the country. But this past weekend, the open house was really great. So I've been reaching out to 3 people. Out of the 8 people that came through, 3 of them were unrepresented. So I've been trying to like pull them in.
Yeah,
Haven't
great.
really hooked them yet, but working on it.
Awesome. Great job.
No, papi.
Sorry.
Sorry.
Greg, no, you're okay. How's business going, Ray? Oh, are you?
Did you say my name?
Yeah,
I was trying to connect my headphones.
you're all good. Sorry. How's business going?
Going well. I got two buyers, two sets of buyers I'm speaking to. One's out in New York looking for plots of land and back in town here in Eugene. And then the other ones are here local. I got from an open house.
Awesome.
So keeping myself busy. Haven't found any listings to list yet.
Good
But
job, though.
reaching out to expireds and moving with the process.
Great job. Sung Choi. There you are.
Can you hear me?
Yes. How's your
Sorry.
business?
Oh yeah.
Okay. How's your business going?
I'm keep making some event to meet my friends and ex coworkers.
Good.
Yeah, and just trying to being more me like thing.
Uh-huh.
So yeah, just I'm trying to make some conversation with relating to their housing issue and their life, everyday life things. So
Good.
yeah, just trying to be more natural.
Good. Excellent. And oh, did Bo get off? Okay, I think they may be having some computer issues. Okay. All right. So without further ado, we have Curtis Della Hook here as our instructor today. He has a background in operational planning and medical sales, and then transitioned into real estate to best use his customer service and negotiation skills to help others build and maintain their equity through real estate ownership. He started his business as an outsider without a local sphere of friends or family, and he's been with KW for nearly 5 years. He enjoys helping clients overcome the unique challenges that can be presented in the sales process, and he's also married with 3 kids and enjoys surfing, snowboarding, and mountain biking. That's your updated one, right?
Yes, thanks,
Okay,
Mara.
good. I was like, I hope this is the updated one as I was
Yeah,
reading
no, that
it.
was perfect. Yeah, thanks for the handoff. I
Yes,
could jump right
absolutely.
in if that sounds good.
Yep, go for it.
All right, so this is going to be a very, very interactive class. I'm going to ask tons of questions, and it's kind of depending on the level of interaction, the more you put in, the more you're going to get out. Typical. I know you've heard teachers say that before. I did want to touch just briefly as we start moving forward on the buyer rep agreements. And I know they might seem like a pain and that you have to do them, that it's a new requirement and all that kind of stuff. But I can say from my perspective that honestly, they're honestly, it's a great requirement that it's now in place, because I started my career in a world where when you're talking with buyers, oftentimes they're in conversations with 2 or 3 other agents, and you never know if they're fully committed to you. So use that to your advantage. You know, you have exclusive buyers, which is fantastic, because pretty much nobody within Keller Williams Realty was using the buyer rep agreements way back in the day, but now that it's a requirement, you have exclusive buyers, and use that to your benefit and advantage. Yes, please, BJ.
Yeah, I just done a live session with Jen, and I'm new to the industry, just 1 week. This again, buyer representation is also new. As a buyer, I know that those days, like again, we work with multiple agents. There's no requirement. So one of the first rule is if I have to show a house to a potential buyer, it has to be through an agreement. Otherwise, I'm not allowed, legally not allowed.
Correct.
Or even like how about a conversation having a
So showing the home, if you are opening the door as a buyer agent, opening the door for a potential buyer, you must have a buyer broker agreement in place. There are exclusive buyer broker agreements and non-exclusive. But I won't go too far into detail on the difference between those two. I heavily lean towards the exclusive buyer broker agreements. So just, yeah, keep that in mind. If you're the listing agent, you do not, if you're not representing the buyer, you can open the door for a potential buyer as a listing agent, but you're doing so not representing that buyer. If there's no buyer broker agreement in place. Does that answer your question?
yes, answer my question.
Excellent. So let's jump in. There's obviously the typical Ignite framework of information. I kind of like to toss that out the window. I created my own outline of information that I wanted to share with you today, and I hope all of you will benefit from it and hopefully have a handful of takeaways. So the starting phrase that we're going to get warmed up with, we're going to focus on buyers first with qualifying them, and then later in the class, we'll shift over towards sellers. But the phrase you may or may not have heard at this point is that buyers need to be ready, willing, and able. So what does it look like to you? Just kind of initial question. What does a ready, willing, and able buyer look like? Does anyone want to answer?
He has enough money for the down payment, and I'm seriously looking for a house. Like basically, he need a replacement. Like either it's moving, like finding a house in a new location, or 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 something very important warrant him to get a house. Some important reason.
They had
Yes.
a pre-approval letter also. That would be a ready and willing, able buyer.
Perfect. Yes, absolutely. If that buyer is approved from Rocket Mortgage or some bank that you've never heard of on the East Coast, does that give you any reservation, Alex?
No.
I'm not too sure, honestly. I haven't really been in the business that long to differentiate whether they're on the East Coast or the West Coast.
That's fine, and I'm putting you on the spot. All I would say is a lot of times there's certain online sites that will draft and give you pre-approval letters. Basically, a buyer can easily get a pre-approval letter that might not be very legitimate because they haven't verified their income or other details. So just be careful if a buyer comes to you and says, "Hey, I'm good to go, I'm ready," and they drop maybe a Rocket Mortgage pre-approval on your lap or somewhere else that's not maybe doesn't have a local reputation or local presence here, because they might not have actually looked at their income statements and bank statements, and kind of done that full. So I'm just saying that because I don't want you to waste 3 months of your time, showing a buyer, working for a buyer when they look strong up front, but perhaps that approval isn't quite as strong as it looks on paper. So excellent. So let's jump in. I have several different they're not rhetorical questions, so we'll kind of engage depending on if you want to discuss some of these points further. But when it comes to looking at your buyer clients, and I've learned a lot of these points I'm sharing with you, I've learned the hard way. So just take it for what it's worth. We can discuss them if you have questions on them. But starting up front, does your buyer trust you, and are they loyal to you? So are they making comments, for example, up front that, hey, I've already tried working with 2 other buyer's agents, things just didn't work out. Your kind of radar, your red flags should be going up. Why didn't things work out? What happened? Was it the agent's fault or was it the buyer's fault, right? Because they'll never admit that, but just kind of keep that in mind. So do they trust you? Are they loyal? Has your buyer bought a home before is a big one. So when you're qualifying them, how would things look different up front if they've never purchased a home before versus if they've purchased 7 homes in the past?
Another one that I got kind of used to asking was, how long has it been since they purchased a home?
And expand on why you like that question.
Only because homes 20 years ago have a big difference from homes now.
Exactly. Yes. And you're beating me to one of my points. That's excellent. Along the lines of, do they have a good understanding of what the current market conditions are? Because just like Ray's saying, some people might be totally out of touch with reality, and you might get that phone call of, hey, I'm looking for a 2000 year of construction or newer on 3 acres within 15 minutes of Eugene or Springfield, and I want it under $300,000. It might sound exciting to have a lead that says that, but really that's not the strongest of lead. And unless they're willing to kind of reshape their criteria, just like Ray's saying, their expectations are going to create some giant headaches, for you down the road. So that actually leads towards my next, so to answer my own question, so if they've never purchased a home before versus having bought many homes before, for example, in the past, your level of coaching up front is going to look quite a bit different. They're going to have no idea what title and escrow is. They're probably going to have no idea what the mortgage process or like working with a lender looks like. They're not going to know anything about appraisals, home inspections, any sort of the contingencies. So all those sorts of things, make sure you're doing the legwork up front to make sure that they're prepared and that there aren't any big surprises coming down the road. Heck, your buyer, if it's their first home, they might not even know what closing costs are. And some lenders honestly don't do a great job of explaining that up front. So don't just assume that that buyer would know what closing costs are. The 3 big contingencies for newer buyers that I like to make sure to discuss up front too, and this just helps show your professionalism as you're kind of speaking towards contracts. But I like to mention and make sure that they're familiar for newer buyers. The inspection contingency is huge, and make sure you know that inside and out. The financing contingency and the appraisal contingency. So if you're not super dialed in on those, make sure you're just reviewing the contracts. But all your buyers should know that those 3 exist. Here's the next question. What contingencies go away if you have an all cash buyer? Of what contingencies of those 3 go away with an all cash buyer?
Financing.
And typically appraisal, yeah, you wouldn't have to do an appraisal. You could do an appraisal, but typically you wouldn't have to have one done. VJ, you were going to say something?
So I have a question. Are these all default contingencies? Like you don't have to explicitly state to the buyer. Like for the buyer, they get this protection, all 3 this contingencies, without asking. Like as a buyer, explicitly placing, as per the law, you get this all 3.
Yes, so great question. So I typically use OREF forms. As you know, there's 2 different types. I'm still heavy on OREF forms, and it's already built in there within the contract. So it's part of the offer process. But make sure you're reviewing. You should know your your buyer contracts, your real estate sales agreement contract. You should know that inside and out, because there will be tons of questions that come up for your buyers. And most of the time, the answers are already in those contracts. So just know those well.
I have one question on the appraisal contingency. So appraisal contingency, this is my understanding. If it doesn't appraise as per the offer price, like buyer can withdraw.
Mhm.
He has a leverage to withdraw the offer. That's my understanding.
Yes, yes, one of the contractual reasons that they can terminate. And there is a clause within the OREF forms, within the sales agreement for residential that, yes, that does protect the buyer in that manner, so they could contractually terminate and get their earnest money back. Good question. So moving along, I touched on it briefly, but do they have a realistic criteria for your buyer? And honestly, I know I'm teaching this class, but I still get beat up on this one too, because this can really be a big judgment call on your end as the broker. Does your client have a realistic criteria? Are there any homes on the market currently that even meet their criteria? Or do you think within the next 4 to 6 weeks that a home could, come on the market that would meet their criteria? Because if it doesn't, it's really up to you to try and get creative and find out ways and approaches on how to find off-market properties for your clients, which is a lot easier said than done. And you can spend all sorts of time spinning your wheels trying to find off-market properties. So just be
A
smart
lot of
about
those
that.
properties are in trust. That's what
Yeah,
I have found.
yeah, exactly.
Yeah.
Yeah, so making sure they have realistic criteria. I've also found a lot of times if they're looking for like multi-generational living, maybe special requirements around ADUs, things like that, that can really make criteria difficult. And if there's no flexibility in there, just, see if they're at least coachable or workable, and at least see if there's flexibility within their criteria. The other big one when it comes to criteria and determining if they're a solid buyer or not is, are they specific with where they want their location to be? Or is their location include Lane County, Douglas County, Benton County? Are they all over basically this region of Oregon? Or are they saying, hey, I'd like to live in Eugene, I'd like to live in Springfield? Is it specific? And I'm saying this from experience. I've had buyers where their criteria, it's like Pandora's box, it gets blown open, where initially you're looking within one neighborhood or one city. And then before you know it, you're looking within 3 counties, and it makes it really difficult. And from my experience, most of the time, if your buyer's not specific in their location criteria, it's probably going to be a nightmare for you as the agent. So it's your judgment call on, working for them and representing them and all that kind of stuff. But just keep in mind, if they get really squirrely on location, that could be hours and hours of you on the road going down to Roseburg or, all over to the coast, wherever else. Just make sure they're specific on that and stick to their criteria. We talked about being coachable. Hopefully your clients are a little bit coachable and will at least take some recommendations from you, especially as you get more and more experience. They need to be just leaning on you for your expertise and saying, hey, this is normal within a property, or this is not normal. Or, I see this often, and, we can totally work through this issue, or, hey, this is an issue we should be terminating over. But your client needs to be leaning on you for certain key coaching tips. I also mentioned, I think Alex touched on this, but are your buyers focused or are they casually looking? What could be a question that you would ask to determine if your buyers are focused or if they're casually looking? Because we never want to be off-putting with our questions, but we want you to protect yourself, right, with asking the right questions to help you help them. So what would you ask?
You can ask how soon are they looking to move?
Sure. Yeah. Yeah, DJ?
Are you willing to make a cash offer direct for this property?
Mhm. Yeah. Good. Yeah. So yeah, just touching on motivation. You really making sure there is some motivation, making sure there's purpose and reason behind their decision making. If they need reasoning, if it's a preferential move of, oh, it'd be nice to move, that's a totally different buyer than, hey, I'm relocating from a different state and I just picked up a job and I need to, I need to be moved in within the next 2 months. It's a totally different buyer than, oh, someday it'd be nice to have a slightly larger backyard or a slightly bigger home. So just kind of keep that in mind as you're as you're talking to clients. Okay. And then here's a big one that's good to keep in mind. Do your buyers have to sell their current home before buying? So what factors come into play? Actually, I'll put one of you on the spot. What form do you have to use if your buyers need to sell before they can purchase?
A 1041 exchange.
So a 1041 exchange is specific to investment properties. Section 1044 tax code. That's not specific to residential purchases for primary home occupancy. Yes, Greg.
Limited agency disclosure.
Sorry, can you say that again?
Limited agency disclosure.
So that is a form that's certainly part of the process. The big one you want to keep in mind if you're doing the contingent right to purchase is it's just like it sounds, the contingent right to purchase addendum. So in that addendum, it outlines the property that has to sell before you can afford the purchase of the property. So it protects, you want to make sure you're protecting your buyer because you're probably going to be listing their home as well. You need to make sure that they can terminate on their purchase if their current residence is not selling in a timely manner. That makes sense. Just review that form. If you review the form contingent right to purchase, it's either addendum or agreement. Just review that form with an OREF. It outlines all the details in there. It's really well written. Okay. I won't go too specific into that. But keep in mind that that's going to affect your timeline significantly. And there's all sorts of factors that can come into play with, with that whole scenario, especially with the fact that right now we are seeing some listings sit on the market longer than we have in the previous few years. So making sure that if you're listing their home as well, that it's priced well, that it's in a condition that's going to sell in a location that's desirable. All those factors need to be considered, and that's where you as the expert can provide a ton of value. Do you think it's easier for a buyer to move from the city out to the country, or for the country out into the city if they have a contingent right to purchase addendum and they have to sell their current property?
From the city out to the country?
Yes, exactly. So it's usually harder to sell a property out in the country. So it'd be easier to purchase in the country. So yeah, Ray's correct. And I know that sounds, that might sound like you wouldn't run into that situation, but I keep running into that recently. So, okay. My next point is kind of a question, but a comment as well, is do your clients, your buyers see you as the agent as kind of an obstacle or like a cost burden, or do they see you as an asset? So are you providing them with enough value, information, guidance, where they're leaning on you like an asset and that you're not like an obstacle getting in the way? So just kind of keep that in mind as you're moving forward. You never want to be, I kind of basically say to my clients, I never want to get in the way of you getting this property, because sometimes I feel like your personal preferences can come into play. So make sure you're complementing their needs well. Did somebody want to say something? Oh, somebody admit. Oh, there we go. Julie just joined. Okay, so moving on. We already talked about them using previous agents. So if they have been working with other agents in the past, that's kind of a red flag if things didn't work out or things fell apart. Now that we are using buyer broker agreements, I won't talk specific to numbers or anything like that, but if this buyer is going to take 3 to 6 months hypothetically of your time, probably not your only client, but if they're going to take 3 to 6 months of your time, will you be paid accordingly? So just kind of keep that in mind, that oftentimes I do it as well. You get excited, you get a new buyer lined up, they're willing to sign paperwork with you, you want to be reasonable with price points. That buyer might take 3 or 4 times longer than you're expecting. And typically with the buyer rep agreements, you can't increase in terms of numbers or percentages, unless in special circumstances, but you can decrease per Tammy Sue. So just keep that in mind. Are you being compensated for the amount of work you're going to be putting in? Okay. does your buyer get caught up on small details, or can they see the big picture of buying or see the big picture in the home buying process? So this is a really big one. I had a client about 1.5 or 2 years ago, and on paper, she was the absolute picture perfect person, all cash buyer, uh, strong motivation and really heavy needs to move. So on paper, she looked like the perfect client. And then over time, over a few months, it just became the nightmare client. It was really the first client I actually fired because she was so focused on tiny details within the home that were almost irrelevant. That she basically would talk herself out of multiple deals and multiple homes that would have been a perfect fit. And then she'd lose the home to another buyer and get really frustrated. And it was just way too much emotion. But she was basically her own worst enemy. So keeping that in mind, like great buyers, in my opinion, are ones that kind of see the big picture, or maybe you lose out on a home in a multi-offer situation and they have the perspective of, hey, it wasn't meant to be, or they have the big picture and not just get focused on one home or one detail of that home, because that can really create some big headaches for you. So I won't go too much further down that. In terms of strong buyers and qualifying them, so when you come down to finances, this is just a really big piece with looking at your buyers. Is your buyer barely able to afford the home or a home in general? Or do they have a little bit of extra money where after they move in, they can do some updates and some upgrades if they'd like to kind of customize the home? So I know when you first start out, the buyers you work with sometimes are probably some of the most challenging buyers of your whole career. And I've got plenty of stories for another day, I can share with you as well. And a lot of those buyers are right on the margins of being able to purchase. They might barely have enough for closing costs, barely have enough to pay for an inspection. And they're really just squeaking by. So in those situations, their stress levels are just quite a bit higher, and they're going to put some of that stress on you. It just happens as part of the business. Ideally, when you're qualifying a buyer, they're not coming down to a very last dollar to be able to purchase the home. So they have money if they need to replace the hot water tank or something like that that's not covered during the inspection negotiations. That's really a preferable client. So just kind of keep that in mind, is the tighter the buyer is on their funds and their money, probably the more stressful it's going to be on you. And their expectations might be slightly unrealistic at times. Okay. Does your buyer, when you're discussing topics with them, I just kind of watch out for some of these buyers. So does your buyer always kind of have a negative outlook on the purchasing process or on previous experiences with buying or selling? Do they constantly bring up like old issues with insurance claims with properties? Do they constantly complain about the cost of housing? All those different topics kind of oftentimes paint the light of it not being the strongest buyer. So just kind of keep that in mind. Okay. And then the last piece I had within this category is your buyer punctual when coordinating both with you and with the lender? So oftentimes the lender will reach out towards the beginning of the relationship and request all sorts of documentation. If they're really slow and they're not involved or engaged, it's kind of a good sign that they might not be heavily motivated or quite ready to purchase at this point, in their career or in the calendar year. So keep those things in mind. Good. Okay, I've got scenarios for buyers, so I'll run a few of these scenarios past you and ask you in the situation.
I have a question.
Yes.
Like on the loan, the buyer have by default protection the loan contingency. So in this case, what if buyer is uh, like doing this process, use this to his advantage, want to get out of the contract, so basically delaying the loan process or something.
So your buyer's delaying the process?
Yeah, buyers purposefully like to use a loan contingency to his advantage and want to get out of the contract.
Mhm.
Um,
In my recommendation, so there are additional contingencies to get out of the contract past the three we discussed, right? We discussed the inspection, the appraisal, and the financing contingencies. The preliminary title report and the seller's property disclosure also have their own contingencies tied to them. But the main one is really the inspection contingency. It's kind of for the most part, a no fault contingency with terminating. If they don't approve the property, there's always issues that are going to come up during the inspection, even a new construction home. So yeah, usually the inspection is the one you'd lean on to terminate if you had to. And terminations do happen. I think it's somewhere around like 7 or 8% of contracts are terminated. So yeah, does that answer your question, BJ?
Yes. So my question is like more related to the loan contingency. What if buyer later in the process want to get out of the contract and he want to use this contingency to his advantage and purposefully delay the loan process? Like
Mm,
basically, like later he got a better choice and want to get out, use this contingency to his advantage and basically purposefully delay the loan process
mm.
or not submit the important documents so that the contingency take into effect. He get to so he don't lose the money, earnest money deposit.
Sure. So the big question would be if it's intentional and if it could be proven. But chances are the listing agent's going to be talking with the lender if there's frustrations and delays. And most likely the lender's going to share, hey, it's not on my end, but the buyer's not providing documents causing issues. So in that situation, your buyer would have a heavy risk or possibility of losing all their risk money. So I really wouldn't recommend going that direction. Yeah. And lenders, oftentimes, most lenders and transactions, they have a local reputation to maintain. So they're not going to listing agent angry because it's their reputation, right? If the buyer's making the lender look bad. So the lender may or may not disclose that, hey, they're just not acting in accordance with expectations or in accordance with contract because there are provisions within the sales agreement that says, I'm hearing a lot of echo. Do you guys mind? I don't know if it's on my end, but do you guys mind muting your mic if you're not talking? Okay, thank you. I was just getting a lot of feedback there. So yeah, so I would just caution your buyer and heavily discourage or not do anything intentionally where they're trying to manipulate the system. The financing protection is really, in my opinion, it's more to protect the buyer, like if they lose their job or for some reason if the lender provided a very poor pre-approval or something like that, then the financing contingency would trigger.
Yeah, kind of extreme cases. One of the reason why I brought up this question is like, so recently I'm hearing the market is like more of favoring the buyer climate, and so I also heard from my friends. Basically, they put an offer, and they get a better deal from other houses. They were halfway interest. Some buyers are doing it, and I got to know about this because market favors more buyer. That's how I'm seeing it. That's the reason I brought up this question.
Sure. That makes sense. And buyers can get squirrely in some circumstances, but you do risk losing your earnest money if you're, so essentially what I'm hearing is that they're terminating for a non-contractual reason. Because it's more preferential than actually due to the loan. It's their preference has changed. So a termination, during the inspection period, usually it's you're kind of the catch-all for terminating. It should be due to, an issue found during the inspection. But those other contingencies get a little more nuanced with trying to terminate during those. So yeah, good questions. I'm going to ask a few scenarios. Actually, I'll just ask you real quick, just an open question if one or two people want to comment. What does your perfect buyer look like? Like if you had to envision in your mind the most amazing buyer, what would they look like? It's probably, you might never meet this buyer ever in a transaction, but what would you say that perfect buyer looks like?
Probably all cash, willing to buy, ready to buy today, like on the go. That would be the perfect buyer, no financing, no nothing, just all cash if he had it in the bank. Obviously, we want to know it's not dirty money or something.
For me, it would be a prepared business owner with financial awareness of the market, looking to do 1031 exchange, working on getting a home and probably building it. That would be my perfect buyer. I'd be willing to spend some time to get that done.
Sounds like a very complicated ideal buyer, but they certainly exist, yeah. The more, and you already know this, Ray, the more variables you add into the buying and selling process, the more challenging and usually the more amount of time it's going to take. So your income per hour is going to decrease, with those additional variables. VJ?
Proactively involved, like interested in asking more questions and exploring more properties, and kind of like you get a sense he's quickly going to make a decision and seriously want a house.
Excellent. Good. Okay, so I'm gonna jump into a few scenarios here. One more thing I did want to touch on real quick. Last time I did this class, I brought a lender on and it became a little bit too convoluted, so I just decided to simplify this section of the class. But when it comes to coordination with a lender, lenders usually say they don't want you to financially overqualify the buyer before giving the handoff to that lender. But we also want to make sure we're not sending tons of terrible leads to the lenders, because it's a waste of everybody's time, to be honest. So some questions you might want to ask, the buyer are potentially around, this is really up to you and your judgment call, but I typically ask if they have a source of income that comes in on a regular basis, just very general questions like that, to make sure at least that they can qualify. Usually buyers that only have Social Security income, and that's their only source of income, are not able to prove enough funds to be able to purchase a home. So you will come across those buyers from time to time, unless they have other savings or other assets that they can use. So kind of keep that in mind. And then if a buyer does bring up a lot of different financial issues, hardships, things like that, back payments, or they haven't been paying their property taxes for at least the past 2 years, chances are they're probably not going to qualify unless there's a special loan program, for them. So just kind of keep those things in mind before you have that warm handoff to a lender. Okay. Yes, Ray?
I was made aware of that. Nowadays, lenders carry loans that they can use straight out of somebody's 401k, and it won't be a tax deductible. I can't hear you. Your mic's off.
Yeah. So, I think what you're explaining is that funds used to purchase a home from a 401k are not tax deductible, and that is an allowable exemption for the purchase of a home. Usually, I think within most 401k contracts, I think that's more for like the down payment and like closing costs of the home. But yes, that is something I've seen that go well, and I've seen it like get pretty ugly too, because depending on the account manager for the 401k account, they can make your life very miserable. And if they're not notified several weeks in advance before closing, they can completely kill a deal. So, but yes, that is in most 401ks, my understanding is there's a provision within there that allows, that's a tax exempt allowance for an early withdrawal of your 401k. Yeah. Okay. So moving on to some scenarios. So just bouncing some buyer scenarios off you before we head into the seller portion of the class. You can just tell me if this buyer sounds like a good opportunity, someone you want to work for. And you could say yes, no, or maybe. And you can also feel free to explain why you may want to work for them or not want to work for them. Okay. So the first buyer scenario. This buyer is looking to buy soon. They have to sell their home in Central Oregon first and find a realtor to help them sell before they can purchase a home. Is this a buyer that you'd want to keep in touch with, that you'd want to work with? And that seems like a good opportunity.
If he was moving up to Forest Grove where I'm at, that would seem like a decent opportunity. You know, if he was moving to California and I had to go to Southern Oregon to sell the home, I'm up in Portland, you know, it doesn't make
Yeah,
sense.
sure. And
It
just
just
to work with
depends
them on
on where
the,
he's going.
yeah, that makes sense. And just to work with them on the buyer side, so you wouldn't be the listing agent in Central Oregon for their home. But yeah, that's a good point, Alex. So yeah, so this would be a pretty strong buyer typically. This would be one you probably have to nurture though, because they're probably not going to be ready to buy right away. They might want to start seeing homes early on, but they probably won't be able to actually purchase until you're a little further along in the selling process of their home. Okay. Okay, so this next buyer scenario, this buyer wants to buy a home in 3 to 4 months, and their cousin lives locally and is currently getting the real estate license. Would you want to work for this buyer?
How
So they,
soon is he getting his license?
yeah, what other questions would you ask? That's an excellent question.
You like and trust your
I
cousin?
would see.
Excellent question.
Yeah.
Yeah. So yeah, once they get their license, do you plan to work with your cousin? I've lost clients because, hey, their spouse got their license while we were working together, or it happens. It happens.
Yeah.
Doesn't mean they're going to have a great experience with their relative or friend or whoever it is. But you just protect your time, right? Protect your time. Yeah. So would you work for this client? Is it would you say kind of a toss up, a maybe?
That one's kind of
I
a
would say
toss
yeah.
up just because they can tell you they'll be ready in 3 or 4 months, but then their cousin all of a sudden gets their license in 6 months and they get cold feet with you and they're like, okay, I'm gonna just wait. And you've already, like you said, you've put in all that work and all of a sudden he goes with him and you're out of the picture.
Right. Right.
So
So
that was
yeah.
a little
So
more risky.
exactly. Exactly. So yeah, just something to keep in mind. So protect yourself, protect your time. Um, and I think it oftentimes depends on the buyers too. Some buyers might kind of look out for your interest a little bit more. Other buyers could care less about you. It's just human nature, right? So you just kind of want to get an understanding of that buyer. Um, and then also now I wrote these questions before the buyer rep agreements were required. But now those buyer rep agreements are required, and you have the option where if they do terminate on you, hypothetically, you could put in, a certain dollar figure where if they terminate, they do need to compensate you for that. So it's another way to protect yourself. If you kind of see this scenario unfolding. Okay, so the next scenario, um, so yeah, so this one, I'll say, I'll kind of word this one as this buyer's been talking with another real estate agent. They can't decide between you and the other real estate agent to go with. Would you be okay with signing a non-exclusive buyer agency agreement with them and showing them a few homes this Saturday?
Put it in the contract, like I can show you the first 3, 4 homes for free, and then after that, if we any house after that, if we terminate, it would be like a $2,000 termination fee or something.
Okay. Yeah,
But
I
yeah,
mean, you could
that was a little more risky too because whoever brings him the house or if he finds a house gets paid basically. Like you could be doing all this work
Mhm.
and I get paid, but let's say you're a new agent and you have no business, that's also an opportunity. So
Yeah,
that for me, that's
absolutely.
like a maybe, depending on I'd have to
Yeah.
feel out the person. And then if I felt like maybe he was really motivated, then I might go for it. But if I felt like he wasn't, then I would just kind of back out a little bit.
hmm I I probably would have said the exact same thing in your shoes, Alex. You know, when I was first becoming an agent, I probably would have said the exact same thing. When I was a brand new agent, it was nose to the grindstone. It still is, but nose to the grindstone. You don't want to lose opportunities, right? If there's a reasonable chance you could get a closing, you don't want to lose that opportunity or that buyer, right? You got to work hard for all your opportunities, and it's a slower market right now. I would just be careful in if they're not willing to commit to you in any way, shape, or form, and they're only going to sign a non-exclusive buyer agency agreement, I would say the likelihood is that they're not really your client, right? So unless it's like an investor situation or kind of a special circumstance, you know, they should be able to choose one agent. And the sooner you get them to choose, the better, even if it's not you, because they're going to make that choice at some point. I would just try and force their hand and make them make that choice sooner, right? You know, tell them what you can offer, provide value to them. But they're going to make that choice at some point. Just have them make it sooner. I had just a quick story, but I had some buyers. I've been in contact with both the husband and the wife for weeks and weeks, if not a few months, kind of on and off the phone. This was kind of right before the buyer rep agreements went into effect in August. And I put a lot of work into like coaching, training, all that kind of stuff. And they basically said, hey, we've talked to a lot of agents. You're going to be our guy, you know. And I said, great. I said, okay, let's get this buyer rep agreement signed. You know, it's coming into play now. And we're at the point where this is going to be, you know, it's going to be required. And they got really cold feet over that. And I said, hey, if I'll put all this time and effort into them. If they're not willing to make that final decision of like being committed to me, I'm not going to waste any more time with them. And I just stopped pursuing them, stopped keeping in touch, not putting in any more effort, because you need to protect your time. And people don't realize that real estate, you know, a lot of potential clients will waste your time and won't think twice about it. So protect yourself is all that I'm getting at there. Okay, so next scenario. Let me just scroll down here. Okay. Okay, so this prospective buyer, they reached out to you. They said they've been looking for a home for 4 years. They might use a real estate agent, but they also might just get their own real estate license to avoid transactional fees. Would you work for this buyer?
I probably would, and if he was looking for 4 years, that's a pretty undecisive buyer.
Exactly.
And then on top of that, he's saying he wants to get his real estate license to avoid fees, so he's already against the idea of paying you, you know?
Exactly.
So that seems kind of like a hard ball game to play there.
Yep, well said. So very difficult buyer. So the next buyer, you chat with them, have a really good chat, share some really good info to them. And as you're wrapping up the phone conversation, they say, I'll contact you when I'm ready to talk further. How would you handle this client, and would you continue pursuing this buyer?
I would put him on a smart plan on command and see if I can stay in contact with him so that you're on top of mind. And when he's ready to buy or sell, then you know he can contact you, or you can reach out to him.
Excellent. Yeah, there's no right or wrong answer here. But yeah, just this is kind of one of those ones where you might not want to burn too much of your time and energy on them. Maybe keep them in your pipeline and see how things shake out down the road. But if they're kind of putting you at arm's distance and not super engaged with you, they're at minimum probably not a right now buyer. Okay. And probably not the most fun to work with either. Okay, so your next buyer, you have a decent phone call with them, and then they have to kind of wrap up the phone call pretty quickly. And they say, yes, I want to buy a home, but can you call me back tonight after work? How would you handle the situation? And do you think this is a serious client, or are they kind of just blowing you off?
I will try to reach client after work. Try to sense. follow.
Yeah.
Don't make any guess.
Yeah, absolutely. Yeah, no, that could be a decent opportunity. And the next buyer, I'll just kind of say out loud, is certainly a strong buyer and one that would be fun and enjoyable to work for. But the type of buyer that's like, we were talking about ideal clients, of course, cash buyers, but also having like a close friend or family member that says they're planning to purchase and they wouldn't want to work with anyone else. That's the those are the type of clients you want to work for, where they appreciate you, they value your time, and they look forward to kind of going through the process together. It certainly is kind of a journey most of the time with your buyers and sellers. It's not just 1 or 2 phone calls, right? I think the average is like just over 130 touch points between a real estate agent and their client before they purchase a home, or until they purchase the home. So it's not just your 1 or 2 calls and you get the deal and you get it locked in. All the lead up, coaching, showing homes, the whole contractual process, making sure they're happy after the home. It's going to be 130 plus touch points, whether that's emails, texts, phone calls. It's a very intensive process. And doing it with, a friend or family member is usually more enjoyable. Okay. Okay, so this next buyer scenario, you connect with these buyers who aren't sure exactly where in Oregon they want to move to. They're considering Eugene, Lebanon, Albany, Cresswell, and Springfield. They also need to sell a warehouse in California before they can purchase a home out here. And they're looking for multi-generational living for under $1.2 million. So are these buyers that you'd want to work with?
I want to cover all the questions I can first.
Mhm.
First, as to how many people are making the income to make the multi-generational home happen, and is
We'll say-
everybody willing to get
Mhm.
qualified?
Mhm. So it's really just going to be all cash. They're going to use the proceeds. I know I said it quickly. They're using the proceeds from the sale of a warehouse, so they can purchase the home in Oregon. And they need to sell the warehouse in California first. So they would be cash. So the financing wouldn't be the key concern. But their search criteria, they're looking Eugene, Lebanon, Albany, Cresswell, Springfield, and they want multi-generational living for under 1.2 million.
That's what I was gonna say. Their criteria is all over the place, but if you can get them down to narrow it to, like, let's say Portland or Eugene, like if they can specify those areas, then they would be a good cash buyer once they sell their warehouse. But yeah, like when they're all over the place, it can be a little difficult because they might not be decisive right away. It might take months and months and months, and you might have to look through city after city,
Yeah.
Is there warehouse to sell, or are you saying that they already have cash in hand from the warehouse sale?
Yeah, the warehouse hasn't closed yet, so they need to finish that sale. And then once they do, it's already under contract. Once it sells, they have all that cash on hand. The other thing, so when I drafted this scenario, it was actually people I was trying to work for about a year and a half ago. And it honestly became a huge headache. The reason being their location criteria was just so mixed and constantly changing. And pretty vast areas they were searching within. And then the other big challenge was multi-generational living of under 1.2 million. So zoning, as you probably know, within Oregon, if you're looking at like exclusive farm use and farm forests, those are usually like the larger plots of land where you could actually have a second residence, but the zoning can be very, very restrictive to being allowed to add a manufacturing home to build another stick-built home on the property. So it honestly was a huge headache. I think, and we kind of went separate ways. It didn't all come together, but I put a ton of time and energy into it. So the more you can all I'm trying to say is the more you can recognize up front with kind of the red flags and challenging criteria, the more headaches you'll save yourself down the road, so that you're not 6 months into working for people who are becoming worse and worse clients by the week, so to speak. But the next scenario, I know that was a very specific scenario, so the next one's a little bit more straightforward, but this buyer wants you to help find land to repurpose for a nonprofit dog and cat sanctuary, but they haven't raised the necessary funds yet for the purchase. Would you work for this buyer?
Probably wouldn't, just because it's outside of my expertise. I'm just a new agent, and having to find land for an organization sounds like a lot of legal work.
Similar, similar answer. Yeah, it is totally outside of expertise and too many constraints. He has to sell first, and this is a totally completely different property. It's not like typical residential.
Mhm.
And and chance of finding the property is very tiny. I would say 5%, 5 to 10%.
Yeah, well said. So very, very challenging client. Um, yeah, you're gonna spend a ton of time on this. It's a very, very challenging client. And the big piece here too is they don't have the funding yet to be able to create this nonprofit dog and cat sanctuary. So really their expectations are gonna be probably unrealistic on you as the agent. Okay. So next scenario, okay, you've got an all cash buyer. Here we go, your all cash buyer. Everyone's been waiting for it. For a 3-bed, 2-bath home in Springfield on its own land, and they want it for $230,000. Would you work for this buyer? Why or why not?
That's pretty low, 230,000 all cash. I
Yeah.
would have to do some research, and if some of the homes fit that criteria, then yeah. But if it was like all the homes were going for 450,000 and he was trying to pay 230, then yeah, I wouldn't pursue it.
I mean, it just takes, I feel like it would just take some time to nurture the buyer into educating them how the area looks, and then letting them decide whether it'd be a good fit for us to work together, just to develop that relationship. I mean, they're willing to buy it, to do it all cash. What's holding them back if they've already had this in mind to purchase a home in Springfield? What's holding them back from doing the cash as a down payment and then getting some financing to cover the rest?
Right. Yeah. No, EJ?
Also, like try to inform or educate the buyer. Like just all cash offer means not we get the housing, big discount, maybe a small leverage, maybe like 1 or 2% advantage. Trying to like educate the buyer how practically this will work.
Yeah, absolutely. And when I hear the numbers 230,000, unless it's really a fixer-upper, it'd have to be a true fixer-upper type investment property, in my opinion, for there to be a stick-built home on its own land in the Springfield area. So that would work if it's an investor who wants to rehabilitate. But if it's your typical home buyer who wants to finance the purchase, we're looking for a home that would be financeable in better condition. 230,000, just won't cut it. So you guys hit the nail on the head there. Okay. Next buyer, they're looking for a cash deal. Sounds pretty promising, but they don't want to provide proof of funds when submitting an offer, and say, hey, just go ahead and submit the offer. And within 3 to 5 business days, I'll provide proof of funds. Would you want to work for this type of buyer?
I would need to see the proof of funds first, and then yeah, I wouldn't want to work for him if he didn't want to show me the proof of funds first before we put in the offer. I wouldn't do it, just because what if he doesn't have the funds and then all of a sudden you're putting in offers?
Yep, exactly. Red flags should be going up. And you're kind of putting your reputation and neck out on the line, right? By submitting an offer that doesn't have the proof of funds. Because what happens if you go pending and the listing agent keeps bugging you and saying, hey, proof of funds, it's due within 3 to 5 business days, whatever you put in the contract. And then you don't furnish those, it goes from pending to back on the market. Listing agents probably mad at you or frustrated, and then you put all this time and effort into writing the offer, and the buyer just wasted your time. So there may be very rare circumstances where maybe you wouldn't have the proof of funds with the offer, but for the most part, it should raise a red flag of why, why is that not available? Maybe the funds are coming from some sort of account manager that doesn't work on weekends or something like that. And maybe it's an older client that's not very tech savvy, for being able to pull proof of funds online. So things like that, maybe there's legitimate reasons, but for the most part, it's just kind of a red flag. Same thing with like a client not wanting to put earnest money down, things like that. You should say, well, wait a minute, what's going on here? Is this a serious buyer? Is this a real buyer? Or are they just wasting my time? Okay, so next buyer, this is an interesting one that I ran into as a newer agent, and it really frustrated me, but maybe I can save you guys some headaches. So this buyer has $300,000 in cash in the bank. They can prove it to you. They have no employment or income, and they want to purchase a home for $375,000. Can they make it happen?
I don't think you can, because in order to get a mortgage, wouldn't you need the proof of income?
Yes, yes. So even if you can cover the vast majority of the offer and you only need, say, a 10%, loan to value of the home, you're still going to have some sort of source of income to be able to qualify for a loan. Even if you have an 800, your credit score is 800 and you have 90% of the funds, you're not going to be able to qualify for the home without some source of income or a cosigner. So yeah, that scenario really frustrated me. My buyer was really angry at me. The lender said, hey, my hands are tied. I can't do anything about it. Unless there's a very special loan program that, they need to see proof of funds. It doesn't matter really how much money you have in the bank. If you don't have any steady source of income coming in, there's no way for a lender to lend on that. Okay. We're almost done with the buyer portion. Okay, so this buyer, we got just a couple more scenarios on the buyer side. So this buyer, oh yes, Ray.
Just a quick funny one. I ran into that same thing where they're like, yeah, there's no way that we could lend to somebody without steady income. But I believe the only place that allows you to is most dealerships when you say you're an angel investor.
Yes, that's funny.
Which is pretty funny.
You're saying for purchasing a car?
Yeah, for purchasing a car, they will. I just found that funny.
Yeah,
But
that's too funny.
I can see the liability of that.
Yeah, and of course, the car is a totally different asset, and like chattel property versus the home as your primary residence. There's all sorts of different laws and rules and protections. So yeah, but that is funny that for the cars. So yes, so this scenario, there's a buyer. Let's see if you'd want to work for them. This is a buyer, they're a veteran, they're moving to Oregon, who wants to use a VA loan. This buyer has disability income, military retirement income, and is taking a job in food sales at the University of Oregon. He wants to find a house for under $500,000. Does this seem like the type of buyer you'd want to work for?
Yes. Like there are a lot of advantages for him, like VA loan and constant income from the disability and
Yeah.
unfixed budget like 500K.
Yeah, excellent, Vijay.
Depending
I've
on
also
what
heard
type of
VA is
profession he was in for the University of Oregon, he could also get additional discounts on his loans.
Nice.
Yeah, I heard VA loans also does like no money down, so they'd be able to qualify for a decent home, especially if it's under 500,000.
Very good, yeah. Yeah, exactly. So very good. Yeah, no, that'd be a strong buyer. Okay, last buyer scenario. just to kind of get you thinking. So would you want to work for this type of buyer? They're Southern California buyers who have plenty of funds and all sorts of condos and investment properties down in San Diego. They plan to purchase a home for their daughter and her daughter's family. So for the daughter, son-in-law, and the family. There's lots of questions about properties. They're constantly hitting you up about property questions and virtual tours, but they never have their family who's in town here join for the showings. Would you want to work for those type of buyers?
I mean, it just
That's a
sounds
little
like they're the
tricky.
ones invested in this, not the
Yeah.
family. So I wouldn't push with the family. I would just be more adamant about staying in touch with the people who are making the general decision. And then I would just pursue additional questions as they come for the people who are going to live in the residence. I feel like that would just be the most appropriate way to go about it.
Mm-hmm. Mm-hmm.
But yeah,
I think my
I'd see
first
them as
question.
buyers.
I think my first question would be if they're the ones who are going to be purchasing / paying the mortgage. And if they are, then I would pursue it because at the end of the day, if they're just buying a home for their daughter and then they're the ones paying it, they might just be the ones who choose out the home. But if they're not going to be the ones paying the mortgage, then you would want all the decision makers there to decide on the purchase of the home.
Mm-hmm. Yeah, excellent. You guys, all of you hit on the key points. You want to make sure the key decision makers are involved in the whole process. Or else that can lead towards this scenario in particular for me. I spent countless hours working for these clients, and pretty much the family that was going to be living their kids' family that was going to be living in their grandkids in the home, they were almost never around. It was like they were key decision makers in the process as well, right? Because they were the ones going to be living there and their parents trusted their judgment. So the fact that I was kind of kept at distance, should have been a sign or a signal to me that I wasn't really interactive or engaging with the people who'd be living there that were family members. So lesson learned, but something you want to kind of figure out in advance. Are they keeping you away from some of the decision makers? And if so, is there a good reason for why they're doing that? Okay.
Yeah, that would have been like I feel like I would have just asked if what's the situation as to why they're not being talked about or included, or is this like a lease to own for them through you guys? Is there an agreement in the background that maybe we're not aware of?
Exactly. And
Yeah.
this is one of the many scenarios where I wish I had a buyer rep agreement in place.
Yeah.
I won't go too far into all the details, but honestly, it's a great protection. It's a good thing that it's now being required. The buyer rep
Yeah,
agreement.
that's awesome. That's awesome because you can fill in multiple decision makers on the buyer rep agreement.
Mm-hmm.
There you go.
That too, yeah.
Yeah.
So good, excellent. Well, if you're ready for it, we're going to shift over for the last 45 minutes of this class to the seller portion. Let's talk about qualifying sellers. So a couple of points just up front. Sellers are typically more challenging leads to come across. And from your communication with Mara at the beginning of this class, that sounds accurate. But sellers are also an important part of growing your business. And it creates more of like a multi-dimensional business where instead of just servicing buyers, depending on what the market's doing, it's nice to have a little bit more of a balanced business where you can serve both buyers and sellers. And it gives you a lot more perspective and insight into servicing your buyers when you're handling listings and dealing with listing contracts and receiving, sales agreements from other buyer agents. It's a whole different perspective and a whole different kind of piece of real estate that's fun and exciting. So a lot of times they say try to have as much of a balanced business. A lot of agents would say try to have a pretty balanced business between buyers and sellers. If you read Millionaire Real Estate Agent, they heavily advocate for having more listings and focusing on listings because they say that you can have more leverage with listings, and listings can also at times help generate leads. Because you are advertising, you do have a sign in the yard and online, your name is oftentimes on that property for that listing. So something to consider. So listings are important. I know it might feel like it's going to be a challenge to get to the point where you get your first listing, but don't get too discouraged. Opportunities do come up, and make sure you're ready to handle those opportunities when they do come around. So let's talk a little bit about what an ideal seller looks like and kind of just some factors to think about. So for your sellers, you want to be thinking about same things with the buyer, in terms of it ties in with being a buyer, but do they have a solid plan for their next home and for the next location? So I've turned down a listing at one point because the seller had no idea what she was going to do and where she was going to land. And it was just going to be a huge issue. She was selling our manufactured home in a park, and she just really didn't like the park management and just said, I got to get out of here. But if I sold her home, she's probably going to end up homeless, and I couldn't in good conscience move forward with assisting her because I didn't feel like she had any sort of plan in place. So does your seller have a solid plan for their next home and the next location you're moving to? The other really big thing too, when you're qualifying your sellers, is if they're making a big move and you're helping them on the buy and sell side, you want to make sure, or if they're moving as a, connecting with a good agent, but you want to make sure that they're able to qualify. So say if they're going to take out a new loan for their next home, you want to make sure that they can still qualify again for their next home purchase. There's all sorts of factors that can come into play there that might impede their ability to purchase their next property. But you're not really, in my opinion, doing a good service to your seller if you're just selling their home and not making sure that they have a good place to land and that they can qualify within reason for a property, wherever they're moving to. So there's always more variables involved when you're working with sellers in this situation. Okay, so are your sellers, the other thing is, are their timelines realistic in terms of when they need to sell by? Are they gonna panic if their home sits on the market for more than 1 to 2 weeks, or do they have an understanding of what the market's doing right now? Do they need, questions you want to be asking them to see how serious of sellers they are? Do they need rent back after closing? So do they need to stay in the home after you close? Do they have certain factors that are going to really complicate the sale of the property? Is there significant deferred maintenance, major issues with the property, that are going to come up? Or, does the seller have, are they underwater on the purchase? Did they purchase it? I saw this quick tangent. I saw over on 41st Street in Springfield. I showed a listing a few weeks ago, actually it's probably 2 months ago, on 41st Street, and it was initially listed for $680,000. The buyers had purchased it, well, the sellers at this point, when they were buyers, they purchased it for $640,000. And that was only about 1.5 years, 2 years ago. They went to sell their home, right? They bought it for $640,000, it's currently listed for $680,000. And over the past 2 months, their listing agent and the sellers did aggressive price reductions, and it just sold for $550,000. So they sold for $90,000 under what they bought it for just a couple years ago. And yes, that's the market, but they probably also overpaid at the time. Might have been a multi-offer situation, but not all sellers can handle that kind of hit, right? A lot of your clients, especially if there's a loan on the property, they can't take a $90,000 hit if they bought it 2 years ago, because that means they'll have to pay off the mortgage an additional, $30,000, $40,000 or whatever that is. So kind of keep all those factors in mind to make sure they're a good seller and a seller you want to work for. And sellers can create a lot of headaches for you, right? They can have certain financial problems or issues with paying utility bills or all sorts of other things, and you can find yourself in the middle of it. So just make sure you're asking the right questions up front and qualifying them appropriately. And then also, if you do see deferred maintenance, is your seller, do they have any funds to be able to make those repairs, right? If the roof is clearly in dilapidated condition, major roofing issues, maybe you see a tarp on the roof and it's visible from the street, whatever else, that immediately should trigger in your mind that this home's probably not financeable if the roof is not in satisfactory condition. So if the home's not financeable, what does that mean about your seller prospects, or excuse me, your buyer prospects for your seller? It probably means your buyer pool is going to be quite a bit smaller, right? So keep all that in mind if they don't have the funds to do that. You know, there are options for some roofers to be able to be paid out at closing. But I won't go too far into that. But just keep all those factors in mind, because you need to be, as the agent, you need to be the expert on all the variables and factors. And no agent is perfect, right? There's things that we might miss or overlook, but you need to know kind of the big topics and the big pieces to best coach your seller, to make sure, one, that you can maximize the equity in their home and kind of minimize the stress and headaches for them down the road and in the future. So you can really play a massive role in the success of your seller. And then in terms of the list price too, so you want to make sure that your seller has a realistic list price when you're qualifying them to say, hey, is this a seller I want to work for? Earlier this year, I was at a property just south of Eugene, and at a listing appointment. Listing appointment was going fantastic. They liked what I was saying. We were clicking over the home. It was a beautiful home. The home was built within just the past two to 3 years. They have beautiful finishes. It was built by Hayden Homes, Simplicity by Hayden Homes. It's one of those packages right on the golf course. And so there was a lot going for the home, but their numbers were at least, well, their numbers were, yeah, about 20 to 25% higher in terms of where they wanted to list than what I felt the market would support. And even though everything was going amazing, I could have, purchased the listing, so to speak. I could have maybe bumped my numbers up. But you got to think, at the end of the day, right, when you're qualifying the seller, you're going to be putting a lot of money into the home when it comes to the marketing, advertising, paying for photography. You got to think about everything you're doing on the MLS, all the fees you're paying to the MLS. It is not free for you to be taking a listing, right? You have listing signs, lock boxes. Listings are not cheap to take, right? So they call it buying a listing if you're listing a home well above what the market could support. And oftentimes, what's going to happen in that situation is the home's going to sit on the market for a few months, maybe several months. Your seller is going to get more and more frustrated at you because maybe you agreed to list it higher than where you should have. And at the end of the day, the home expires, right? And maybe they'll put it on the market with a different agent. Maybe they'll stay in the home and change their plans. But you're out all of that money, right, that you invested into the home for marketing, advertising purposes, and everything you spent to try and get that home sold. So just be really careful when you're qualifying the buyer. Are their expectations realistic for the list price? And long story short, this listing that I didn't take and didn't try and chase the listing price earlier this year, it was listed by it's since been listed by two different real estate agents, both who are very reputable, good reputations, and well-known agents. And the home expired. It didn't sell for both of those agents. So protect yourself, protect your money, and realize that when you take a listing, it's not guaranteed money in your pocket, right? It oftentimes takes time, strategy, negotiations, how you're finally paid. Any questions on that?
I have a question. I never knew about the listing contract. So as per your explanation, if the listing is expired, so the seller agent loses all the money he invested.
The listing agent loses out
Listing
on any money you've invested into the property through, well, not into the property, but any money you've invested into marketing, advertise, photography, videography, any sorts of paid advertising you've done online. You put a lockbox on there, you put bought yard signs, all that kind of stuff. It adds up very quickly, and typically you're not going to get compensated if the home doesn't sell.
Okay. So after expiration, listing agent loses all this money.
Yes. Some sellers, maybe they'll say, hey, I feel really bad. Maybe I'll pay you a small sum. But most of the time, the seller's going to be like, hey, you didn't do your job and you didn't sell the home. I gave you a chance. And they're not going to think about you or your bottom line.
So won't there be contract like to protect the listing agent, like if it expires and not selling and they have to pay the money?
I
Or
personally,
it's not normal, those kind of contracts.
I personally haven't seen it. Maybe Tammy Sue principal broker would advise otherwise, but I typically haven't seen that. Yeah, so just keep that in mind. Protect yourself. You want to make sure if you take the listing, it's a good listing that you are confident you could sell. And yeah. So, yeah, I think a lot of people just see real estate agents as, automatic income, or, they're always making big commissions and paychecks. But just keep in mind, you got to protect your finances, right? So, yeah, it's not guaranteed that your listing is going to sell, especially if your price point is well outside of the margins of what that neighborhood is doing for sales.
Also, that type of like environment, so right now, the Fed follows a tight monetary policy. The interest rates are high, and I see in my neighborhood a lot of houses were listed for long, 100 days. Even I remember those sales signed for more than 6 months.
Mhm.
I think we have to consider those pictures too, like price plus the tight monetary policy conditions.
Mhm.
I think that those factors also we have to uh, take into account.
Yes, definitely. Yeah. So just be smart. Use your judgment, and yeah, and when it comes to repairs and fixing the home, of course, the seller should be paying for that. That shouldn't be out of your pocket. Some listing agents, depending on how you structure things, with staging fees, they'll pay for the staging fees up front out of pocket. That can be expensive. So if the home doesn't sell, you could be out a few $1,000s, right? So just be smart about how you're managing your finances and what you're promising the seller. And if you're listing the home high, or you and the seller are discussing, hey, this home is above what I feel confident will sell at, is the seller willing to come down a little bit in price over time? Or is it, hey, we're selling at 680, or we're not going to sell at all? So you just need to have a realistic seller who understands the market and is willing to take your recommendations and your advice. So, okay, good.
Can I have a question?
Yes.
Yeah, just for your information, I'm very new to agent job. I just started my job, so the big picture of buying and selling whole process is not well structured in my brain yet. So yeah, so my question is, so if I meet a person seller who's very stick with a certain unrealistic amount of selling price, then should I avoid to start working with that person, or should I keep persuading and explaining why your price point is not realistic and you should reduce it, decrease it? So which way should I take?
Good. Yeah, good question, Sung. I would, if their price is unrealistic, I would try and provide them with solid, comparable listings that have sold, not just active listings, but listings that have sold recently in their neighborhood, and try and justify your price point, and also share with them, that market inventory has been increasing, and we're right around 3 months of inventory. If you saw that most recent report, and that's on the higher end that we've seen in the past several years of home inventory. So there's a lot of competition in the market amongst sellers. And if a seller is pricing above their competition, it's going to force all the buyers to go to the other properties. So if they can't, I would try and reason with them. And if you have at least if they're willing to chat with you and have that conversation, I would put the effort in to justify that. Yeah.
So all those kind of process should be done before signing on listing agreement, right?
That's my recommendation, because on the listing agreement, normally you agree to the price point that you're going to list it at.
Mhm.
So that's my recommendation, to reach the price point before you sign the document. And the other thing too is Mara or Aaron may have offered this, but if you run into a tricky seller situation, lean on one of us, lean on Mara, lean on Aaron, lean on me, and say, hey, help be the co-listing agent. So I'll just back up. I've made this mistake of losing listings or losing clients because I should have brought in another agent who maybe could have helped handle that situation where, hey, at least hypothetically, at least, and maybe you didn't make your full commission, but you made 75% or 60% of a commission at least, instead of losing the whole deal. So if you need to, bring on a co-listing agent within our brokerage, and they will help you through the process and help make sure that home sells where you still get compensated, you still get paid, and you don't lose the deal altogether. So that is something where I should have done that more as a newer agent. But yeah, I even had a phone call, it might have been a year ago or something, but I wasn't answering the exact questions the way the seller wanted. I should have just brought on a co-listing agent, to be honest. And she was just being a very difficult seller at the time, but I think she had seen like I was just under 5 years of experience in the market, and she wanted somebody that had a ton of experience, 10, 15, 20 years, which I just, even with my experience, I've done plenty of sales. She just wouldn't give me much time. And at that point, I honestly should have recognized that and brought on a co-listing agent who has 20 plus years of experience in a brokerage. And then at least I would have made a commission, through that and not lost the whole deal. So there are times where that does make sense.
Great, thank you.
Of course. And of course, working with sellers can be more challenging than working with buyers. And it does require a little bit more of an investment on your end. Working with sellers, it can be a bit more costly upfront. Okay. Another big question, just like with buyers, has your seller sold a home before? Are they familiar with the sales process? That's always a big one, depending on how much coaching you have to do for them. And also just coaching them on the market, making sure that they're able to, you can read the market and react together depending on how the market's responding to their listing. So sellers need to understand that the market is kind of fluid, and depending on interest rates and things like that, it's really impacting the number of buyers that can afford their home. Okay, and then we were talking previously about the decision makers being involved in the process with listings. It's really important to know how many people will be involved in the selling process. Like Ray was talking about, a lot of homes in Eugene and Springfield are in different trusts. And they're tied up in a trust, and you might have to have 3 or 4 people signing off, 3 or 4 trustees signing off within that account in order to get that home sold and to also sign your listing contract. So make sure you know that up front on who the decision makers are. Okay. And then we talked briefly about updates to the home, but and this is another big one. If you guys ever need service professionals to do work on a home, let me know. I've got plenty of trusted people that I work with, but you want to make sure that the seller understands that if they're not willing to do any repairs on the home before you list the home, if there's deferred maintenance, that will definitely impact the list price. So a seller might want to use a comparable sale, say if their neighbor's home that sold 3 doors down, but maybe their neighbor kept up with all the maintenance and the home was in much better condition. So even though the square footage and footprint and everything is the same for your seller, if they haven't been doing all that maintenance, their home is not worth what the neighbor's home was because they did their maintenance, they kept up, and it's going to be a lot more appealing to the buyer pool because the buyer is going to say, hey, this home is move-in ready, versus maybe your seller's home is, hey, this is going to take $20,000 worth of work after moving in. So kind of keep that in mind and make sure you're coaching your seller through that, and make sure your seller is not trying to bully you with comparable listings. Okay. Yeah, and then similar, another thing to keep in mind is, has that listing previously been listed and expired? So that's really good information that you need to pull ahead of time. Um, was there a problem with the home? Why didn't it sell? Was it under contract with another agent? It didn't sell in that situation. Like, what happened? What are the reasons? How can you make sure that doesn't happen again? And was the price point appropriate if the home didn't sell at that previous price point? So just a lot to consider there. I do have some scenarios for sellers that we can discuss and work through. Okay. Okay, and I do have a open-ended question too, before I hop into scenarios. So does your lead source matter? So how you found the lead, does your lead source matter in terms of how you qualify your seller?
Are you asking like, does it matter where the lead comes from before you qualify the lead?
Mm-hmm.
I guess it doesn't really matter where it comes from as long as you qualify them and do your due diligence, you know?
Mm-hmm. Mm-hmm.
I mean, if it's like a cold call, then I don't see why it would be any different. As long as you qualify them and they fit the criteria for a good buyer, then I feel like that's a good green light.
Mm-hmm. Okay. Yeah. Would any of you take a different approach depending on where? So I guess to like make it more specific. So if your seller lead came from the internet versus your seller lead came from a neighbor that was, 4 doors down the street from you, would you qualify them differently? Um, and I guess I know it's kind of a tricky question, but you're probably gonna have to spend a lot more time and effort on an internet lead versus someone you already know who already knows, likes, and trusts you. Um, and um, a lot of times there's going to be more variables involved with that internet lead as you move them through the process. But overall questions that you should be asking your sellers and things like that, that should be pretty similar through the process. Okay. Okay, so let's move on to some scenarios for these different sellers. Um, so scenarios. So this seller needs to move as soon as possible to a different state. They're currently being evicted from the manufactured home park that they live in. Would you want to work for this seller? Yes, no, or maybe?
No, just because they're already at the lowest price point, and if they're getting evicted, that means that they don't have any money to buy a home.
Mm-hmm. Good.
Same no answer.
So, but you're right, Alex, on they're not going to have money to buy the next home. You're totally right on that. But with the eviction, they're going to have to move no matter what, if that makes sense. So my previous criteria earlier in this meeting where I said, don't sell somebody's home if they have nowhere to move to. In this situation, they have no option, but they have to sell, if that makes sense. Yeah, because they're being evicted, their hands are tied. So VJ, did you have something?
I kind of have same answer like Alex mentioned. Again, the eviction like I'm hearing new for a seller. Like eviction is for renter is fine. I thought eviction concept apply to renter, but
Yes.
seller is evicted. I'm I'm hearing it new.
Oh, so yes, I can explain, VJ. So when you live in a manufactured home park,
Okay,
you own the home, but not the land underneath.
okay, different criteria. Okay,
So
manufactured.
the park management is allowed to evict a really bad tenant or a really bad homeowner from the park.
No, it makes sense.
Yep.
So
I was
maybe
thinking he rented also.
I see.
so the I would try to put little time investment, like try to understand what's the reason for eviction, like so if majority of the cases due to the strict rules of the park, strict rules of the park, so that maybe there's a little leverage, the seller might be a potential seller,
Mhm.
like
Yeah.
little bit time investment on try to understand.
Yeah. And so at least you have a very motivated seller in this situation. They have to move, they're being evicted, but that seller is probably going to be difficult to work with. So just use your judgment on, on taking that listing. And then also your commission's probably going to be on the lower end because manufactured homes and parks aren't usually the most valuable type of housing. So kind of keep that in mind. Okay, so this next seller scenario, they took a job in Portland and have to move there within the next 3 months. Their home has been well maintained and they're looking for a smooth transaction and low stress. So they're leaving the Eugene area to move to Portland. Is this the type of seller you'd want to work for?
Yes.
Excellent. Yeah. It's a fantastic seller. Their timelines are realistic. Listings usually take a little time to get ready. Most of the time, you're not going to have a listing where someone says, "Hey, you need to list my home tonight." Usually, it's going to be a few weeks or a few months out. But yes, that would be a very, very great seller. Okay, so this next seller is an investor. They're a landlord who needs to quickly sell his duplex because he needs the money and doesn't want the stress of owning a rental property. Would you work for this seller?
Yes. He has a strong reason and motivation, so he want to sell the house.
Excellent. Yeah, this would be a great seller. Yeah, absolutely.
Yeah,
Okay, the
I was
next
gonna say
seller.
the same.
You agree, Alex?
Or the only thing I didn't like was that he was trying to sell it quickly,
Mhm.
But
he had an unreasonable timeline.
you mentioned he's an investment. It's an investment. Does he have renters there? How's
Yes,
the
he does.
investment work? Okay.
Mhm. Yes, yeah.
Do we run into like property management at some point when we're dealing with all those type of investors?
Oh, yeah.
Yeah.
Definitely. So usually, oftentimes investors will have a property management contract in place. So it's not like you remove the property management company from the equation during the listing process. So for example, usually you need to notify tenants 24 hours in advance before a showing or before going into the property. Usually the property management company would be notified and then they would post notice, either, post notice on the door or text, the tenants 24 hours in advance that that's going to happen. A lot of investors and landlords will say there's going to be no showings until the duplex is under contract. And then basically you just put a contingency in the sales agreement that within the first few business days, the buyer can walk the property to their satisfaction.
Okay.
Also, there's a limitations when there are tenants in the property, like 3 months. They have to give like a 3 months time to vacate the property. They cannot they cannot be not evicted. Like 1 month notice is not sufficient. That's my understanding. If
Yes.
the tenants are staying more than 1 year, there are some strict rules. More than 1 year, you can make them move, but 3 months notice and a lot of restrictions come to the picture.
Yeah, exactly. So SB 608 is the state ruling that has that information that VJ is talking about. But typically when they've been there over a year, it's a 3-month notice to vacate to that tenant. Now, it has to be one of the 4 qualifying reasons for them to vacate the premises. So for example, if the buyer and the new owner was going to be occupying one of the sides of the duplex, that would be a qualifying reason to be able to vacate that side of the duplex. So yes. So, yeah, and making sure that that notice to vacate is being provided and being done so in accordance with your expectations is really important on the buyer side. But yes, that's a very important key piece. Okay, so moving along, the next scenario. Okay, so we've kind of talked about this before, but the seller is currently leaving the state in 10 months and isn't sure where they're headed at this point. Is that a yay or a nay for this type of seller? Would you take them on?
Probably not if he's gonna end up homeless.
Sure, and maybe over the course of the next 6 to 10 months, he figures out his game plan. So maybe you nurture them a little bit, keep in touch, and that kind of stuff. But yeah, there's no guarantee this is going to turn into a great seller, right? Because it's so far out, and they have no idea of their future plans. I feel like usually what I see in this situation is they decide just to stay in their current home, and unless they have like a game plan, a lot of times I feel like there's no plan at all. They're just going to stay put.
Have you ever ran into a seller who had no game plan, but you were able to curate their game plan for them?
Usually I like working for sellers that like know what they're doing and like have purpose for what they're doing. The eviction one, a manufactured home in the park, was one where it made sense to still sell their home and they didn't have a good game plan. She kind of had a framework, and then like towards the end of the transaction, that whole framework got thrown out. But she had no choice but to sell. So that was kind of an exception. And people want, I know they joke like real estate agents, you can be like their counselor and therapist at times and everything else. And I don't really advise people on topics unless they ask for it, if it's outside of real estate, and all it is just a recommendation. But yeah, I wouldn't necessarily like curate, so to speak, their plans to like where they're going or what their next job's going to be, or because they know their own motivations the best.
Okay.
Yeah. But good question. And okay, so the next seller, we got about 15 minutes left. This seller currently runs a daycare in their duplex. They haven't moved in 40 years, and they have unresolved issues with the neighbor. But they live in a top-notch neighborhood for selling a duplex. Would you take this seller on?
I would, just because they have probably substantial equity.
Yes.
Yeah. There's going to be challenges with the sale, absolutely. But yes, you don't want to turn down good opportunities. So, Ray?
I mean, my questions would be whether how far along in their professional financial lives are they? Because if they're retired and they could have all the equity in the world, but they're stuck into a reverse mortgage, then they wouldn't be customers that I would want to deal with long term.
Yeah, that's totally fair.
Yeah.
Yeah, totally your judgment call. Because every client is going to come with their own challenges, and you gotta feel confident that you're able to help them navigate those challenges. So yeah, that's good. Okay. So next seller, I'll just run through this one quickly. You just give a thumbs up or thumbs down. So this seller, they have another home that they absolutely love and they want to move to that's closer to family, but they have to sell their current home in order to purchase that home they love. So they've identified their next property, but they have to sell their current home. And their home does have some deferred maintenance. So would you take them on or consider working with them? Yeah, assuming they could fix some of those issues with the home, good. This seller wants to move for lower property tax reasons, but the seller also loves their current home. Would you take them on? Yeah, maybe have some further discussions about their needs. So good. Now this seller has a poor relationship with the park owners, but wants to move soon and really needs to just get into the park. And this is the seller that didn't have any game plan on where they were moving to. So I'll kind of just, yeah, help you out. So this builder, so you're working for a builder. He called you up. He just finished constructing a home in Eugene and wants you to take a look at it and provide a CMA for him. Would you start working for this seller? Yeah, that could be a great seller. Builders can be fun to work for, honestly. A lot of times they're not worried about all the tiny details that the sellers are, that typical sellers are. And if it's a new construction home, you know, that could be a great listing.
So
Low insurance, lower warranty.
Yeah.
Mhm.
So next one, this seller calls you for a listing presentation and said they are interviewing 4 other realtors. Would you pursue this seller?
Yeah.
Something to keep in mind if you're one of 5 that they're interviewing, that's going to be a difficult listing presentation. You know, they're going to try and beat you up, and so just come prepared if you do take it. Yeah.
Yeah.
It's kind of your call on that one. And then but if you don't have a lot in the hopper, or maybe it's a slow month, always worth giving it a shot if you can. Okay. So this seller wants to list the home for $75,000 above your comps. Do you take the listing?
No, they don't seem practical.
Yeah.
Yeah.
So yeah, if they're way out of your range, that's basically going to become a giant headache for you. So just keep that in mind.
Yeah.
And also if you want I've done this before at the brokerage, if you need a second or third opinion, talk with other agents at the brokerage, ask them what they think. There are unique properties, right? I mean, Lane County is full of unique properties on really cool pieces of land that are custom, that maybe don't have good comps. So you could chat with other brokers and say, hey, what do you think? And then and maybe if you start a little bit high, make sure your seller's realistic and say, hey, if the market's not responding well, you know, we're going to need to come down, but have those conversations up front so you don't overpromise and underdeliver, right? You want to underdeliver, or excuse me, you want to underpromise and overdeliver. So yeah, so just keep that in mind. Well, good. And then what questions, we're almost towards the end, but what questions do you have for me as we're wrapping things up here in a few minutes? What would you have changed about the class if you had changed 1 or 2 things?
Dang, the lighting in the back, so bright.
I should have added a artificial back.
I feel like the
That's
class
it.
was really
That's it.
engaging. I mean, it was
Yeah.
really good. I didn't really find much to change, honestly.
Okay, I appreciate it. Yeah, hopefully you guys benefited from that. I'll share my screen with you real quick. Share. So I do have a list of, feel free to screenshot it if you need, but all sorts of different like professionals. I know we have that page on Facebook of different professionals. But if you guys are looking for certain key pros, some of these people are awesome. And definitely worth. I highly recommend anybody here for like hazmat needs, pressure washing, technology or software needs, all that kind of stuff. An awesome serviceman painting for a painting contractor. They're fantastic. So I really like working with them. Really hardworking crew. And then do you guys already have like listing photographers and stuff like that? I don't know where you're at. But DJ Martinez, he does an excellent job. Does stuff with drones, videography, really puts a lot of time and effort into making your listing pop out and stand out. And then if you ever run into like issues with like septic backup or sewage issues, Dan or property 911 property restoration, he's awesome. So feel free to screenshot that if you need it. And yeah, let me know if I can do anything for you guys. I'll put my email address and phone number at the bottom in the comments. Let me stop the screen sharing. Okay. Stop the screen sharing. And then I'll just put my phone number and email down in the comments and I'll send that to you. If you have any questions, just reach out. I know it's really hard to be a new agent and it's a very unforgiving, can be an unforgiving market at times. So reach out if I can help or give any pro tips and things like that. And I think the big takeaway is we're like wrapping up what it means to qualify a buyer and seller is like using your best judgment and doing your homework in advance to make sure that you're not just taking on any old buyer or seller, but that they're motivated, that they're serious, that they're coachable, and that at the end of the day that you're going to get paid from those buyers and sellers because you got to look out for your own, you got to look out for your bottom line and protect your time and your money as well. So cool.
How do you say your last name?
Delahook.
Okay.
Yeah. How do you pronounce yours?
Lavariega.
Lavariega.
Yeah.
Huh.
Yeah.
Excellent. You didn't say it with a Spanish accent. Is it Lavariega?
Yeah, it's just one fluid thing.
Lavariega? Is it? Yeah. Okay. Nice. Well, it was nice to meet all of you. And Ray, I already seen you before, but nice to meet everyone else. And reach out if I can be of assistance in the future.
Awesome. Thank you.
Yep. See ya.
Thank you.
Of course.